Hi guys, I welcome you in this very wonderful video. So when it comes to trading, usually a very important thing that you need to consider before you enter your trade, it is to make sure that your trade is confirmed, or your strategy, it has some steps that will reveal unto you some kind of confirmation, so that you will not just take trades randomly, so without following some placed rules. So confirmation is part of the rules that should be set when it comes to trading, or when you are using a particular system. So when it comes to confirmation, if you are a technical analyst, confirmation might include indicators, confirmation might include time frames, confirmation might also include fundamental analysis, and also it can include sentimental analysis. So that's what confirmation is all about. It's all about gathering information apart from the candles that will synchronize with the candles, or that will work hand in hand with the candles. So it is just adding something, not relying only on the candles or relying only on the price action. But we know a lot who are relying only on price action, and some are making money, but most of them are not making money because it requires a lot of confirmation. Even if it's only price action, you're just drawing trend lines, you are figuring out patterns and everything, confirmation will be needed. Confirmation will be needed. That's why most of them, they use time frame confirmation, whereby we use multiple time frame analysis. So you can check, the video is linked up there in the screen. Confirmation time frames, it is those time frames that are lower than the time frame that you are using. That's where you see the price in a bigger picture. That's where you see the price in an elaborated view, so that you will see clearly the patterns, so that you will see clearly the structures in the time frame. So if you are trading and you don't like indicators, then you should be focusing on multiple time frame analysis. You should be focusing on how to analyze using different time frames. So I will just make a quick example, and then we move to the other. For an example here, let's say you want to buy here. Let's say maybe you are targeting this wave here. This is a corrective, and then you are targeting this impulsive, so that you go with the market all the way up. Let's say you want to buy here. The price is still in the corrective. You don't know when to buy and how to see if now we are ready to buy. So if you are a pure price action trader, there is no volume, there is no oscillator, there is no moving average, there is nothing. Then that's where we'll need to go in our lower time frame. Let's go to our 30 and see. So you can see in our 30 that now you are seeing something which is more clearly. Even if you can go deeper into the 15-minute, there will be more clarity in terms of the market structure. So you can see in the 15-minute that now you have established some kind of wave movement. The market is now moving in terms of waves. You can see some impulsive, corrective, impulsive, corrective. So then it means that you can be able to draw some kind of a pattern or a channel, which is something good. From there, you will be able to observe a breakout, or any sort of touch, or any sort of retest, just as the market did here. It broke out and then it retests. So this retest is visible only in the lower time frame. In the higher time frame, you cannot clearly see. I'm sorry about that. You cannot clearly observe that retest. You see, it's just a series of candles. There is no clear structure in the higher time frame. So that's confirming using time frame. It is going all the way to different time frames and see the other view of the market. And then when it comes to indicators, that's where you are using oscillators, just something like this, where you will say, I am not selling unless I see this red bar, or unless price is overbought. So don't mind, this is an MFI indicator. It is built in here on TradingView. It works the same as RSI and stochastic. So if you are using other platforms, you can use RSI or stochastic. So it's still the same. Confirming using indicators, it is only observing some kind of overbought or oversold zone. And even going further, you can use some things like volume. You can see a volume spikes. Where there is spike in volume, usually price is likely to turn. Why? Because there are a lot of orders coming in. So it's likely that the other side is going to come in. So you can see the areas where there is volume spike, then price all of a sudden begins to turn. When there is a spike in volume, price begin to turn. So here there is also a spike in volume. We're expecting some kind of pause, and then the market is going to turn. Same thing applies here. There was a spike in volume, and then the market shifted from a downward move into an upward move. So it's also an additional confirmation. It's also something that you'll use to confirm as a trader, but then you'll need to understand it more deeper. Whatever that you choose to confirm with, it is then your role to understand it, to study it, and so on. And then when it comes to fundamental, it's also an easy thing. When it comes to fundamental, confirming with fundamental, it is only observing when there is market events, and you make sure that you enter your trades prior to that event. You enter your price action prior to those events, so that those events will push your price to that desired direction. So let me just see if I can find an example. For an example here, let's say you may be anticipating a sell from this kind of key resistance level. Let's say you are anticipating a sell here. You think that, okay, Aussie USD is going to go down. Then maybe they say there's an event an hour from now. There's an event an hour from now. Then as a trader, you enter this trade as a sell, and you put your stop loss somewhere close, so that when the events come, if they push the market down, you benefit quickly, you gain a lot of pips quickly. But if it pushes against you, luckily you have your stop loss. So it's just combining a lot of things. But I will also make a video on fundamental analysis. You can check the list on my channel about any fundamental video. So it's just adding, guys, multiple things that will work together to or to give you that one signal that you want to trade. So remember to comment, like, and subscribe if you're not a subscriber. I love you more. Thank you for watching this video.